Hi everyone, I'm Michael Ruger. I'm the managing partner at Greenbush Financial Group, and with me this morning is my partner in the firm, Dave Wojcicki. Dave is also the managing partner of the Wojcicki & Company accounting firm. And the topic we're going to talk about today is, when does your child have to file a tax return, or when is it optional for them to do so, and the advantages and disadvantages around that? So let's just start off with the easy example that, my daughter starts working, she's 16, she made $5,000 for the year. Does she have to file a return? Should she file a return? How does that work?
Well, no, the IRS doesn't let anybody escape tax. So from a child standpoint, you have to know the difference between earned income and unearned income. So earned income is anything you earn from work, or that's not passive, like interest, dividends, and capital gains, because the IRS has different limits for both. So if you're a child, you can earn up to $12,400 and not have to file a tax return. So if your daughter made $5,000, she wouldn't have to file a return. But I'm always advising the parents that there's generally withholdings. It's not much. It might be 40 or 50 bucks on a $5,000 wage. But if you tell your child that you get a free 40 or 50 bucks by filing a return, they'll likely do it. And it's a good lesson for them to actually understand what filing a tax return is. So I always encourage them, go online. There's generally free services that they can do it, and they'll learn how to do a really basic tax return. And then they'll get a check for 50 bucks at some point, and they'll be thrilled.
Yeah. Now, by them filing a return, does it jeopardize me taking them as a dependent, or no?
No, okay. It's just separate rules. So they have to file if they've got income. So pretty much anybody has to file. There's rules where on the unearned income side, there's different rules where they can just tack their income onto the parent's return. In fact, it's required to. That's the whole Kiddie Tax rules.
At what point do they have to start filing their own tax return? Is it an age? Is it when they're no longer independent? How does that work?
Well, it's still income driven. So you can be a 55-year-old person, and as long as your income is below the filing thresholds, you don't need to file. In fact, a lot of elderly people don't need to file anymore because they just have Social Security, maybe a small pension, and their exemptions are higher than a child's would be. Mm-hmm. So a child generally is the $12,400 earned income, or the rules change when you've got basically a dependent, or a child is considered anybody under 18. Mm-hmm. Anybody that's under 24, if they're a full-time student, can be considered children and dependents to a parent. Okay. And then they can either file their own return separately, or if they have a certain amount of just unearned income, just dividends, interest, and mutual fund distributions, the parents can file a separate schedule. Because the Kiddie Tax, what happened with the Kiddie Tax is, the IRS wants to prevent the shifting of income from high-income people to the lower.
Right.
Hey, if I move all my dividends and stuff to my children, they'll pay less tax and I'll save money. And the IRS said, well, you can do that, but only to a certain extent. And essentially, it's around $2,200 of unearned income, interest, dividends, and mutual fund distributions. Anything above and beyond that, you're going to pay at the parent's marginal rate. So then the decision really for the child is, do I file a separate tax return? Because it does save me a little bit of money. I get to use my own exemptions against that. And if I have earned income, my standard deduction is a little higher. So if I have both dividends, interest, and mutual fund capital gain distributions, and I have earned income, I get a higher exemption than I would get if it was just unearned income. And under that scenario, it may not make as much sense to push the income and pay it on top of the parent's marginal rate. So you got to look at it both ways. But the filing requirement is always income driven. It's never age driven.
So as soon as they make over that $12,400, they have to file their own, can you still claim them as a dependent, or no longer a dependent once they're over the age?
Yeah, the dependency exemptions are different. They're age driven, and they're also income driven.
Gotcha.
So if you had a 50-year-old child who was living in your basement and they were making $8,000 a year, that actually would require them to file a return. You could not claim them as a dependent. So there's just different rules on dependency than there is from filing standpoint.
Now, with the new stimulus payments that have come out, both in 2020 and the ones that are coming up, we've gotten some of the questions that, can we get more stimulus payments by my child filing their own return versus me just claiming them as a dependent? What are you advising?
Well, with the $600 payments, the ones that are going out now, and some have actually received it, the child is defined in 2019, and it's under a child who's 17. So a lot of people are saying, well, I have a college-age kid, and they're not my dependent. And remember, when you file your 2019 tax return, you've already done it. You've claimed the dependency you got. You will get, if you have a 15-year-old child, you'll get that $600 payment if you meet the income thresholds. The Biden proposal out there now, which is an additional $1,200 or $1,400 that he's trying to pass on to families, he wants to raise the age limit to have adult children, which would be college kids and such. What's not clear in his proposal really is is it if you claim the dependent or if you're eligible to claim the dependent? Because there are times now when you have a kid who's in college and qualifies as your dependent because of the income levels. But because of the way the college credits work, it doesn't make sense to claim them. It makes sense for the child to claim themselves. But when they file the return, there's a box on the return that says, hey, my parents haven't taken me as a dependent, but they are eligible to.
Oh.
And there are tax credit reasons to do that can save you a little bit of money. But if you're eligible to be claimed as a dependent, are you going to be able to get that, get that stimulus check? Because, then if you weren't, you probably would just carve out all your children and have them file themselves. If the deduction or credit you get on your individual return is less than you're going to get in the stimulus payment.
Right.
But I think that's to be seen in the proposal.
Okay. I hope this was helpful. If you have any questions, please feel free to reach out to us at moneysmartboard.com. Thank you.